Hello, everyone. Pat Smeater here with you Friday, March the 21st. Interest rate update, the weekly summary of what happened. Now, we got a lot of information Monday through Thursday, but Friday, today, we didn't get much. So hang on to your hats because we're going to go over some key piece of info. On Monday, we got retail sales, which fell. New York manufacturing, which contracted by 20%, which shows that manufacturing is back in a recession. And the National Association of Housing Builders, uh, their confidence level contracted into recessionary behavior, which means that they're anticipating a slowdown in the economy. Well, at the same time, we did see that import prices were unchanged, but housing starts did increase. This may have been due to the fact that what ended up happening was the builders brought in a lot of inventory, a lot of lumber from Canada before the anticipated tariffs, while at the same time, industrial production kind of flattened out. On Wednesday, we did see that the Federal Reserve left the interest rates unchanged, but they did mention a slowing of the economy and they're monitoring inflation to see if they can actually have room to cut interest rates. Now, on Thursday, we did see that jobless claims did rise and got another confirmation that manufacturing is in a decline with Philly manufacturing numbers. However, existing home sales grew dramatically. However, further reading of the numbers indicated that this was contracts that started back in December that were just closing in February, which probably means that we don't have the most recent numbers at this point, while at the same time, leading economic indicators hit a new multi month low. We saw leading economic indicators shrink for a fourth time in a row, which doesn't bode well for the economy. Now, like I said, today we didn't see any major economic news, but there are more and more predictions coming from hedge funds, economists, that the economy is slowing and they are on the lookout for a recession. In fact, there was even one call of a recession by July, which would do well for interest rates and spur real estate activity. Now, if we look at the mortgage backed securities, which help determine interest rates, the technical analysis, we did break out of a range here on Monday, Tuesday, and are in a new pricing bracket. This bodes really well for us. However, we're going to be stuck here for a while unless we get better indicators of where the interest rates are heading. So you are pricing a little bit better these days, but not by much. Finally, our scenario has not changed. That on a 20% down payment, we can do about a 5.625% 7/6 arm. And here are the numbers. So if you have any questions, give us a call. We thank you for your time and we look forward to hearing from you. Bye bye.